I'd like to introduce our first speaker. He's sitting to my left. His name is Barry Sternlicht. He is the founder and CEO of Starwood Capital. When I first interviewed Barry, it was, 12 or 13 years ago. He managed, if I'm not mistaken, Barry, I think it was something along the lines of $7 billion.
I don't remember. It was
His firm is now, he's a $100 billion private equity and credit investor in real estate, one of the most successful of his generation. We're thrilled to have you.
Thanks, Erik. It's great to be here.
So here's where I'd like to begin. As some people here no doubt know, long before the pandemic turned Miami into such a welcome refuge for Wall Streeters, you moved Starwood here from Greenwich, Connecticut. Why Miami? Why not, say, Palm Beach? Why not somewhere else?
First off, I grew up coming down here, so I knew Florida. I knew Miami. My parents had a home up in Inverrary, up in I guess that's North Fort Lauderdale, and my grandmother lived on the beach, actually, like most Jewish grandmothers. and I watched Miami. It had this interesting mix of culture and style and action. And it has actually great infrastructure. It has a great airport, and the access to the airport is easy. So because I run an international company, I actually fly a lot. I travel a lot. And for people to come see me or visitors to come see me, and I think it was pretty evident that Miami was a positive place to do business. And you heard Mayor Suarez earlier. I mean, he's defined a welcoming attitude of government to business. And the partnership between the city and private enterprise trying to improve the community all the time, building schools and roads, infrastructure, parks, museums, is kind of an incredibly pleasant and positive thing that you don't experience that much in the North, where it seems like the government is against success and we all want to help the community. Like, we came down here, and I was just talking on my way over with some of my team that, the city, to really compete, now the city has to help. We need schools, and that's probably the number one thing that Miami needs, because all the companies want to come down here, but they can't come down if their employees, you want to say, where am I getting my kids into school? So they need to improve some of that, with the tech community moving here, partnerships between private enterprise, mentoring, and the universities building out their infrastructure for the companies that want to come here, because it is such a positive and a working system here. I mean, it is really the best of America. It's multicultural, and it wants to work. It makes you proud to be, an American, actually. And in today's day and age, it's a breath of fresh air. So, the mayor is a extremely positive force, and you may not know if you're not from here, there are 26 mayors down in Dade County. So it's like a coalition of mayors that work for the Dade County Commissioner, who's quite a powerful gal herself. But they're all trying to do good, and they're trying to help their constituents, which is so refreshing, as opposed to try to penalize them. And it's kind of, how do we get things done? And they think holistically about the whole environment, which is great.
I think of you as something of a Pied Piper, right? You're the guy people call if they're thinking about moving or relocating their business to Miami. Do you think, Barry, that the city is going through a true and lasting renaissance, or is what we've seen over the past 18 months just a step change, supercharged by COVID, and that eventually growth is going to flatten?
And look, I've been doing real estate in Starwood I used to be the CEO, chairman of Starwood Hotels. But Starwood Capital, which is a private firm, predated Starwood Hotels. And we started moving our investment to what we call, because they're the growing states, they happen to be the red states, or I guess you'd call Florida purple, but it depends on where you are in the state. But they're attracting growth, Florida, Texas, Georgia to some extent, Tennessee for sure, no state income tax. And we've started, even though intuitively we knew that the investments in the Northeast and we used to be bi-coastal. If you were a real estate investor, you would invest in New York, great cities of New York, Chicago maybe, Washington, D.C., California, it's become more and more difficult for investors to invest in those markets, primarily because they're doing their best to chase their residents out. And taxes are going up. Real estate taxes are going up everywhere. So if you're a commercial real estate owner, you have to face ever-increasing taxes. And then you have regulation coming at you from the top, whether it's housing regulation. So we go more in the free market communities where I think you see capitalism I always think capitalism needs to be regulated, but it's working to improve. The housing's getting better, the road systems are getting better. So to answer your question, it's not transient in Miami. I think Miami is and most of Florida is in a stage of attracting communities and investors that appreciate that the state is supporting them in building their businesses and ask, how can we help? Not how can we help create barriers to your success? And I think, so like for example, right here, they're burying the highway. It's a giant project. They funded it. It'll be like a Calatrava-like bridge. They're putting parks underneath it. That's the best of government, doing something for everyone. You know, building parks. And I was asking the mayor, they're supposed to build a monorail between Miami Beach and the mainland. And it'll be a game changer to alleviate traffic from what's a difficult road in 195. The ports, the new bridges to the ports in the communities. So there's a lot of projects the government's doing that support everyone, and it's a positive thing.
There's at least one person in the Northeast singing a different tune, right? The new mayor-elect of New York City, Eric Adams. Do you think that's a sign of that maybe things will change?
Well, I'm a big fan of Mayor Adams, so and I'm really grateful that he's taken over and he'll bring some, I think, sanity into politics. Look, policemen, we know 8% of policemen are doing an amazing thing for you, keeping you safe, risking their lives. And 2% of people, probably 2% of any organization, are bad people. You can't throw out the baby with the bathwater, right? The cops have to sort of regulate themselves. Mayor Adams is going to do that. He's going to restore some civility because people are actually. I love New York. I'm from Connecticut, but I grew up. I spent a lot of time in New York. I don't have a place there anymore, but I do go there. We still have offices there. It's about security and safety first. You'll even pay the taxes. But if you think your kids aren't safe to walk to school or down the block, you're going to move. And so whether it's California and San Francisco, what's happening there, and then you have very difficult environments where defecation on the street is accepted. I mean, that's just not the country that I would like to be, or city I want to be a part of. So, I know this is on the record. I don't mind saying that. I mean, I think it's what you see happening in some of these cities. I don't know who they think likes that, to have your Walgreens and your CVS's looted, to have LVMH stores, torched, and nobody does anything. I mean, exactly what is that message you're telling kids or anyone? So, it's interesting. Miami, after the George Floyd incident, we had very peaceful marches down here. There was no rioting. And there could have been. Right? And it was like, and there wasn't, and it was very organized. It was peaceful. My kids marched in New York, and I believe deeply in improving the social justice system. But, there's a way to do it: quiet protest, and there's violence, and they're different.
You and I spoke shortly after the George Floyd protests, and at the time, you painted a dark vision for the future of New York City. I would venture that the city appears to be bouncing back perhaps a little better than you thought. Are you surprised?
Yes. Yeah, I'm surprised, but I'm not. I'm delighted. That's one place I'm happy to be wrong. Look, I think New York is New York. I mean, it has such energy, vitality. It's interesting. Somebody said to me, this will give the kids a chance to move into New York when all the wealthy people move out. And they'll innovate and it'll be spicy and fun. And New York is New York. If you're 20 to 30 years old and you want to meet a mate, there's probably no better place to do it. There's so much action. But I was surprised, and I don't think it's sustainable. So I think New York's recovery it bounced harder, faster than I think anybody thought. And mostly in residential. Like the office markets are still a mess. The hotel markets, well, just as they return foreign travel to New York City, the Omicron variant hit, or whatever you call it. Omicron. How do you say this thing?
Omicron.
That thing. And so I saw our hotel occupancies in New York drop 20 points in a week, but they were running in the 90s, so people have money, so they're traveling and they're going to New York and they're seeing the sights. But the office market's still kind of And the housing market, the housing market nationwide has exploded, and it just caught up in New York, but I was surprised. I didn't expect it.
What would it take you, or what would it take for you to be willing to put fresh capital back into New York City?
Oh, let's have to see what the regime, it's not just Mayor Adams now. You have to deal with the state government, which is flipped and has very dark blue, I'm talking leaning socialist policies. I have a friend who actually moved to Miami. He's from a venture capital community. He was actually very involved in New York. And he met with the state legislature and he said, when you tax businesses and individuals at 65% incremental tax rates, they can leave. They're going to move. And they can take their jobs, they'll take their companies and their employees, and they'll go to other places like Miami. And property values will fall. And then you're going to have to raise tax rates just to keep your revenues even. Otherwise, you're going to have to cut the school system, the police, the fire department, the waste, everything, all the public services are going to have to be cut. And they say, property values falling is a bad thing. And they said, no. We want property values to fall. That's a good thing for our people. That's a very difficult way to run a town. And that is that's a negative reinforcing cycle in the wrong direction because the wealthy leaving the burden of the poor on an ever smaller revenue base. And you want to provide services you don't have. Now you're going to rely on the federal government, which fortunately Chuck Schumer's greatest accomplishment was getting the money from the federal government, the $1.9 trillion American Recovery Act. I think New York City is getting $10 billion a year for 10 years to cover all their sins of how they acted during the COVID crisis. So, that was probably the most important outcome for New York City was the $1.9 trillion Recovery Act, where the federal government is handing New York City's, basically the other states are handing the government of New York money as far as I can see, and they're not fixing their problems, they're just paying over them with fake money.
The New York City office market is a decent proxy, I guess, for the whole work from home RTO dynamic. Is it? I mean,
no, it's worse. The two worst cities in the country for office are New York and San Francisco, and San Francisco takes the prize. It's a catastrophe. But New York City office is, we thought it would be at 60% in January. We saw Google just postpone let's get back to work. I think it was yesterday. And so New York City was creeping into the 30s in occupancy, and we'll see what happens with the variant. But I expect you'll get back to the 60s in New York, 65, 70.
If that's the case, how is it that Hudson Yards is leasing at $150 a square foot? And
so that's the thing about this crisis. America's rich. There's $2.5 trillion of excess savings, and people are accepting price cuts everywhere, and they're not negotiating. I was actually offered a huge premium for my space in New York. We have space at Starwood in New York, and somebody came in from offshore and offered me a huge premium for our building. I think you're going to see the tenancy change, like the mix of tenants. Who's going to take those big trading floors in New York City on Park Avenue and Fifth Avenue? But if you're a tech company and you want the kids, they're there. And so you come to Meatpacking, where our offices are, and you take a small space, and you're almost like the hedge funds in the heydays of the 80s that didn't really care because they could pay $200 a foot and it was like 1% of their P&L. It didn't cost, they don't care. Some of these tech firms, they don't care. They just need to have space in a cool place. It's a small number in the scheme of their market cap or their cost structure. So New York City, like every other city, the rates should be down, but nobody's pressing hard. Just like a hotel room, we can ask whatever we want all over the country. Room rates are flying, and nobody's discounting. The only thing discounted is like all my things from like Williams-Sonoma and Pottery Barn and every day on the emails, like half off, or the whole store's free. So the retailers are discounting, but the hotels and people are paying more for everything. We're in a pretty steep inflationary cycle.
What changes that? What makes people blink?
A stock market correction. People get their 401ks get knocked down. A serious stock market correction, and I think you're seeing. We're definitely closer to the end than the beginning of the cycle, but we still have. I think the market's baked in this next stimulus package, whatever it is that comes out of Congress. If they don't pass it, I actually think the market could take a a bit of a hike, a bit of a short-term breath, because the market knew about the infrastructure package. That got passed, 1.2 trillion. Again, that's going to be multi-years. But what won't change is inflation. I think the Fed is completely wrong on inflation, because they haven't bought all the steel to fix all the bridges and tunnels and things. That's going to come with the $1.2 trillion. So I'm doing development projects down there, one on the beach up there, and I've got to buy steel. I'm going to be competing against the federal government for steel. And they're not going to want to buy Chinese steel to fix that bridge. They're going to want to buy American steel. So, there's going to be pressure on commodity prices from the stimulus package, and it's going to crowd out and make it more expensive for private developers to build anything in the country, which will exacerbate the shortage of housing that you see today, and why things like rents are going up. We have 100,000 apartments today, and we're seeing 20% increases in rents. I've been doing this 30 years. I've never seen anything like it. And people are renting.
Are those rent increases sustainable as well?
Not at that pace, but they're going, you'll have, we would have underwritten 3 or 4% a year growth, you'll see higher than that. It'll go 29, 6. It depends where you are, but what's amazing, it's the whole country. You can't find a market. Kansas City, Minneapolis, every city in the country is seeing double-digit rent increases, which tells you something that the consumer has a lot of money. But you can't keep compounding rent growth at 20% a year. You're going to run into issues. And the blue states are going to run into politics. They're going to start regulating rents again. So, again, we try to tilt our portfolios to the states that are more free market, I'd say.
Are those factors changing the calculus for you as a real estate investor? Replacement costs are going up, and rent increases are stickier than they used to be?
Replacement cost is rising, so if you own anything, you probably have more room for rents to go up before new supply is justified. That's why inflation is so important to real estate, because if I own an apartment building and I bought it for $200,000 a unit, if it's $400,000 a unit to replace it, you're going to have to get twice as high the rents, or my rents will go up, and at some point they'll be at a point where the economics will work to build a $400,000 apartment. It's very, yes, it's coming into play a lot, because rents are moving so fast right now. And rents in office, we just completing, we're moving into a new headquarter building for our public company, Starwood Property Trust. We'll move in December 17th. We'll be in January 1st. It's right on the beach across from our one hotel. And in the time I was building that building in Miami, rents are up 60%. You're seeing rents right here of almost $100 a foot, $75 a foot. And this is where 30 and 40. So while the office market's sort of more abundant across the country, there are places like Nashville, New York, Austin, Texas, where actually office rents are rising even while these buildings are 30% occupied, because most people do not expect us to stay this way. So
you've talked about
office demand, that's what I meant.
You've talked about positive leverage in real estate, which is to say, financing costs being lower than cap rates or yields as a tailwind for the last, 20 years? Do they survive? My question is...
Yeah, since 07, 08.
Yeah,
so what he's talking about is if we buy a property, you look at the unleveraged yield, no debt, what's the income, what's the purchase price? So if you're buying an office building, you say it has a 6% yield, or you're in 6% on your money for $100, it makes $6. But you're borrowing with positive leverage, meaning the cost of borrowing is lower than the yield on the building. So you're borrowing at 3 or 4 or 2, and you're buying it at 6. That's called positive leverage. In the 80s, in 2000, not the 80s, 2007, the cycle remember the great financial crisis? Any of you old enough to remember it? You were buying buildings at 5 in New York or 4, but you're financing at 7. So it was negative leverage. So if rates didn't go up, rents didn't go up, you went bankrupt. And you did. We had the great financial crisis. It ended. This cycle has been different, because you used to have to go to Japan to find the spread between a cap rate and the cost of financing to get the gap. So you buy it at 3 or 4 in Japan, you could borrow at 1. You're getting a 200-point spread. Now you can go to the United States and do it. And that's how we bought 100,000 apartments, because we're buying at 5s and financing at 2.5. So our cash yields, leveraged returns are in the 7s and 8s, and and you get paid to wait, especially when interest rates are 0 and everything else you could buy. And so people have been buying property, and we've bought single-family homes, as you know.
Does positive leverage survive the next cycle of rate hikes?
So I mean, that's the number. That's the 800-pound gorilla. That's like the question everybody wants to know. Like, where are rates going? Because what will cause this to end is rates go up, but the government will go broke. We have $30 trillion. We're headed to $30 trillion of debt, and they've borrowed short term. So, if rates go up 30 trillion, run the math. Go up 2%. It's like $600 billion of incremental interest expense. And last I looked, that was the entire discretionary budget of Congress. So you're going to have to keep printing paper forever, as far as I can see, to pay the interest on the national debt. And will it happen? I mean, Japan has had low interest rates for 100 billion years now, right? And it's almost, this is a new, I went to business school. They didn't teach this class. Like, this is the weirdest thing that's ever happened. The 10-year today was below 140, right? We have the highest negative interest rates, I think, in my lifetime. I've been around now too many decades. And it's not a business school class anyone's ever seen. And don't think this is normal. Like, people think this is like it's a new thing. The laws have been suspended. It's a new cycle. This is not a normal economy. Even under Trump, people forget we were running $1 trillion deficit. That was not the Bill Clinton economy. The Bill Clinton economy was a balanced budget. Clinton balanced the budget. He was a Democrat. Trump ran $1 trillion deficit to boost the economy and run a 3.5% unemployment rate, but it was fake. You can't do that forever. So he overcut taxes, frankly, and I benefited from it, and we didn't ask for it. I'm talking on like like the individual tax rate going from 39 to 38 or 7, and we didn't need that. And corporate taxes he should have lowered, but in 2 phases. He just overdid it to make a big bang, and he certainly made a big bang. So, I think it's not stable. The Democrats don't understand finance to the most point, and they think, hey, we can just print money forever. Look, interest rates are so low, until they're not. And if that happens, if people lose faith in the government's ability to control the economy, like the Fed thinks they can just control inflation by just raising rates. It's going to hurt the little people, by the way. Inflation hurts the little guys. It hurts the pizza guy and the guy wanting to reopen his restaurant. It does not hurt Amazon. They can give them great applause for paying the industrial workers $17 an hour instead of $15. It doesn't hurt them. It hurts all the little businesses in the country. And they have to pay more for bread and for everything else. It's a terrible condition. And I think the Democrats, God bless. Hopefully we'll just do our thing and see how this works out. But be careful. This is a time to be a little cautious.
I'm glad you brought up Amazon because I wanted to ask you about it. You've complained, Barry, that Amazon is destroying mom and pop American retail by using Amazon Web Services to subsidize losses on free shipping. If you believe in competition and a free market, and I think you do, why is that wrong?
So if Amazon was producing steel, you are not allowed to dump steel into cities like the United States from offshore below the cost of supply. And yet I got a bike pump delivered to my house in Miami for free in 2 hours. There's no mom and dad store in the world that can compete with that. So they're hemorrhaging cash, and they're annihilating mom and dad retail in the process. And first of all, I like main streets. I like stores in main streets. I like stores. I like people trying to open a store and they can't compete with that. And we're a society that I have friends. They just push a button, get a roll of toilet paper in a box. Comes in the next day. The paper towels come separately in a box, and the next day we get the Cascade dishwasher. And I'm like, all these boxes show up. Every one of those trips could have been a trip to the supermarket or to the local whatever. So I think it's unfair. They subsidized all their growth through AWS, through the cloud services, which was massively profitable. The government was, as usual, very late to the game. They let them also, originally you didn't have to pay taxes on internet sales. There was an emerging market, right? So they were subsidized against everything else. Now you have $1 trillion company. What's the end game? Your Prime account is going to cost you $500, and you're not going to be able to go anywhere else to shop. They're opening department stores. After destroying the department stores, they're going to open department stores. After mowing down every little business in the country, I come from Greenwich, Connecticut. Like, the main street is half empty. And if you see the store, you don't even know what rent they're paying. They may be open, they may be paying nothing to a landlord because we have no leverage. Like, who's going to replace them? So you let the guy stay and doesn't pay you rent. It's not healthy. It's not a healthy situation. I love landscape of main streets of America.
So
I don't want to see an Amazon truck on and no stores.
How would you fix it?
I'd break up Amazon.
Would you?
I'd separate AWS from the retail business, absolutely. And that's easy.
This is an FTC case?
But it's too late. You've kind of laid it out. You know, China's about to destroy, take apart Alibaba for the exact same reason. They don't want that concentration of power. Americans don't think long term. You can see the future. I think you went to 125 on your Prime account. Now it was $75 before. I mean, my mom, not my grandma, my mom, she's 87. She knows how to buy on Amazon. She didn't know how to do that pre-COVID, right? So she's not making the trips to the store she used to make. And I just like, and I don't think it's, and my friends in tech, of which some are here, they'll say, well, it's like they're providing a service to the customer. Well, giving the customer like things like Coca-Cola, you can kill people too, I don't think that's where government comes in. I mean, the government should think about things like that. That's the strategic fabric of the country, because we're just busy running our day lives. We're not thinking about, my kids buy everything on Amazon. I don't think they know what a store looks like. So, it's like, I feel bad. I love going into stores. By the way, the stores are also screwing it up now. You go in the store, go to Lincoln Road, go into Lululemon, get a medium-sized short. They don't have it in stock. They go online. Why? Because Wall Street helps them with, they want to see their e-commerce sales. They don't want to see physical store sales. So they get rewarded for actually spending all their money on their e-commerce strategy, not on fixing up their stores, not on expanding their stores, and not on renovating their stores. So it's a self-fulfilling prophecy. Of course e-commerce sales are growing. That's what the street wants to see.
Here's where I'd like to wrap up. I recently heard you say that your great hedge is your Bitcoin position. Is that how we all should be thinking?
Yes.
Really?
So I mean, this is for me, but if you have 5% of your net worth, there's only one thing they haven't, in a world where the government just prints money and 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 doesn't seem to have any consequences, sometimes that will end. And the only thing they can't make more of is Bitcoin. It's never been hacked. It has no real value other than there's 21 million coins, infinitely divisible. Gold really doesn't have a lot of value. You can have your gold jewelry, but that could be silver or titanium or platinum. So, in a world where there's infinite, where you could have the Weimar Republic, we all have probably seen that. Was it Rwanda? What country was it where they have like 10 billion? Zimbabwe, the Zimbabwe dollar, right? So you could see the world saying to the U.S., especially with our political isolationism, that they would say, China's going to try to knock us off the dollar standard. And they're going to have a lot of countries align with them with a bridge and tunnel, or road and tunnel, whatever you call it, program. So they're going to try really hard. It's very obvious. They're going to try really hard to break the dollar standard. If that happens and the dollar devalues, you need one thing that could hold its value. And that thing, literally in a scare, it'll go down with the stock market, by the way, and then, in my opinion, it will reverse. And it would go to $1 million a coin. It could do that. Because everyone, it's not U.S. investors, the whole world will look at one thing that they can't make more of, and that would be Bitcoin. So it might be, there are other coins, but they kind of were there first. It has no function other than a store of value. So having a little investment in Bitcoin, I think, might be a smart little hedge in your life, because your paper will be worthless, unfortunately. And I have 2% of my net worth in cryptocurrencies, and a selection of them, something like that. Maybe 3, I don't know. But if it goes to 0, it won't hurt me either. It won't hurt you. But if it goes to $1 million a coin, you're going to look at the TV and get very upset that you didn't buy it. So,
on that note, ladies and gentlemen, please join me in thanking Barry Sternlicht.